Hey there, pro traders, and welcome to our Monday market review on this beautiful Easter Monday. I hope you folks have all had a blessed Easter weekend, remembering what the purpose of it is, as well as much as having a great time with family and friends. So it's been a bit of a quiet time in the market, obviously leading up to the holiday season, and we did have a bit of action with the Euro's interest rate announcement last week, but even that. Typically, as you know, when we leading up to some big news, the market tends to flatten out for a while. So it was a pretty quiet week, but nevertheless, we've got a few trades on the table. And what we're going to do again today is have a look at the valuation account for one of the folks, one of our members who are in our funded account program. Remember, if you're not already in the funded account program, it is a program, live money program where you can trade up to $2.5 million as a funded account member and get very generous profit share from that. And once you get to the 2.5 million mark as well, the sky actually is the limit, because we've got a lot of connections in the industry who are looking for established, successful traders. And really that is the name of the game for us here at the GoPro Trading Academy, is to develop professional traders. So if you haven't yet joined up, please make sure that you check out our training material. And if you are enjoying it, remember to subscribe to our channel and hit that notifications bell. We do bring out new material all the time. And if you're interested in becoming a member of the Academy and taking part in our Funded Trader program, then there are links below this. So please make sure that you do click on those and get in contact with us. All right, so let's have a look at what's been happening in the markets then. Here on the weekly time frame for the Euro USD, we did have a bearish impulse candle last week. You can see that support level being tested through the course of last week. We do have, therefore, an established trend on this time frame for this instrument at the moment. And you can see that we're in a trade there. We'll have a look at what that's all about in a minute. But here on the weekly time frame, pretty clear, in a trend. It's moving nicely, nothing spectacular on this time frame. This is what it looks like on the daily time frame. You can see last week's news day with that big wick and tail. Nevertheless, we are still in that bearish market. So here on the daily time frame, you can see we've got a class 1M pattern at the moment. So ticking those boxes for folks who are using the daily time frame as their selection time frame. I mentioned this a couple of weeks ago, and I just want to reiterate it again. One of the useful things we found over the years is how the 55 EMA often acts as a support or resistance level to signal the end of a retracement wave or phase 2 wave on the higher time frame. So this cyclicity that we saw here was in fact a retracement wave on the weekly time frame, and you can see how that came to an end pretty much in that area of the daily 55 EMA, and you'll see that across the time frame, folks. It's really something that's been very useful, and that is still a price action technique, because it is a level of resistance in this case, the dynamic one for sure. We have static and dynamic. This is one of the best dynamic levels of support and resistance that you can look at in your trading across pretty much all of the time frames. All right, so this obviously was this trade that you're seeing on the table was, I believe it was an H4 impulse. We can actually have a look at what trades this trader's got going at the moment. There's newer ones. So on the Euro USD, let's just have a quick look at what their comments are, because they are using our trade manager, which of course provides comments. So yes, you can see that it is in fact an H4 impulse on that one. All right, so moving rapidly on, you'll see again that this trader is also, they're just about to reach their profit target for this phase of the, this evaluation phase of 6% on this account, after which they move to a live account. All right, so GDP USD, similar picture, not quite as clear as we have on the euro, but nevertheless, it is still a trending market, still in a bearish trend on the weekly time frame. And it has rolled over. So we are in fact seeing potentially at the start of this week the resumption of bearish cyclicity on the daily time frame to fully establish that bearish phase 1 or impulse wave on weekly. So in fact, this analysis can already be advanced now. Normally, I'd only do that at the end of the day, but seeing as we've got this pretty decisive movement so far in the course of the day, let's move that along just to see as well that the picture is not going to change in any way. What we're looking for, of course, is a break below this support level. And remember, in true price action terms, it needs to break and close in order for us to be able to say that that support level has been broken, at least for the meantime. So if price cannot sustain itself below a level, as we saw here through the course of last week and the week before, then we cannot treat it as having been broken. Price needs to sustain itself beyond a level in order for us to be able to say that it's been broken. All right, so that's the pound. So nothing much else happening at the moment. We're pretty much biding our time, waiting for that to happen. Let's just get to the correct time frame here, which is weekly on USD JPY. You can see we're still very much in that bullish impulse wave, part of a bullish trend on the weekly time frame, with a nice strong impulse candle last week, following the inside bar that we had the week before. So a nice resumption of that price movement here on the daily time frame, where you can see we are well outside of the HTC channel. You can see how that level over there, the top of the channel, was perfectly respected on Thursday as a support level, and we've had now a bullish resumption in that. For those folks who are trading the daily impulse, you would have probably jumped into a trade at the open this morning, depending on what your selection criteria, obviously, but as far as I'm concerned, this ticks a lot of the boxes. Not all of the boxes on the weekly time frame, but most of them. But this is another H4 impulse, as you can see, where this trader got in on a class 2 pattern on the H4 time frame. Very nice tight stop. They've passed their threshold for advanced targeting, so they're already trading the stop, and you can see they've locked in good, well, just under, well, what is that? That's almost 2 risk units. So a risk unit, remember, is if you're risking 1%, then 1% would be a risk unit. If you're risking 0.25%, which I think is what this trader is doing, then it would be in the region of about $255 would be 1 risk unit. So not quite too locked in there yet, but still a very nice trade. They'd be very happy with that. And they've still got some time to go before they reach their minimum number of days that they need to trade as well. All right, so looking at dollar Swiss, nothing else. I mean, last week did close outside of the HTC channel. That is true. It is however, only a class 3 W pattern. So actually it might just have made it into being a class 2 W pattern with that close over there. So looking at this on the daily time frame, also well inside of the HTC channel, no valid class 1 W pattern here at all. So yes, we've seen some strong bullish movement with that activity after the ECB's interest rate announcements last week, which led to a very strong bullish candle there. Friday didn't really do much. Let's see what happens today, but we still have significant resistance in the way. So we're not doing anything with that one either. Moving on to Usd Cad, which is another one that we haven't touched that much. I do see that this trader does have a buy trade in. So if you're just looking at the weekly time frame, however, that support level, the HTC channel, as we know from last week's discussion, was respected. That low now ringed at the end of last week's candle. So certainly it has been respected, at least for the meantime. So that's the weekly time frame. There was the potential for a class 1 M pattern, didn't work out with that close inside the XA leg. Right, so looking at USD Cad on the daily time frame, this is a valid class 1 pattern, which clearly is what this trade has gone for here on the daily time frame. And if you were waiting for a daily impulse, obviously nothing going there because of that weekly time frame. But this is as a selection time frame on daily, we could absolutely use. This trader obviously having recognized the end of that bearish wave, using the inside bar on Friday for that as well. And if you're doing that, that means that phase 2 is over, and that would be a class 1 W pattern in the making. So I haven't progressed that analysis as yet on this time frame, but I'm sure you can see that's what it looks like. This trade obviously taken this morning. It's still relatively new. Must have been taken here with a nice class. Well, what is this? Just double check this. This is actually a class 3W pattern. So for those folks who are restricting themselves to class 1 and class 2, you wouldn't have taken it. But this trader obviously having taken it with a class 3W pattern, which is all well and good. Yeah, and so far it's looking okay. Some way to go before they can get their stop to break even, but probably by the end of today or early tomorrow. Right, Aussie on weekly time frame. Last week's candle closing back inside the HTC channel and that XA leg, which precludes any possibility of a class 1W pattern. And also being back inside of the channel, even the channel traders would be leaving this alone as a selection time frame. And here on the daily time frame, you can see, well, we discussed this already previously, how we had that false breakout. It's really just continued to move all the way back inside of the HTC channel. And as of this morning, is in fact bouncing off of that daily 55 EMA that I was discussing just now on the Euro, I think it was. So nothing doing there either. Kiwi, similarly, here's the weekly, and just making that clearer, you can see, likewise, we had that breakout well back inside of the HTC channel, 2 bearish impulse candles in a row on the weekly time frame. What that brings us to, however, on the daily time frame is a test so far today of the bottom of our HTC channel on the daily time frame. So let's see what happens with that. If we do get a breakout, then those of you who are channel traders may well start looking at this for lower time frame trades. Otherwise, you just got to wait a bit longer. Right, moving on to our yen crosses, euro yen, also similar to the dollar euro USD. You can see how we've got the excuse me, let's get a sip of water here. We had that inside bar the previous week. Last week is still inside that extended candle that we had well 3 weeks ago now. So we're still inside of that, but nevertheless, this is still an impulse candle compared to the previous week's high. So that's promising. And then looking here at the daily time frame, there you can see that it's still hovering around inside of not only the channel, but that previous XA leg that we've got over here. So things have moved on a little bit now, but nevertheless kind of stuck there. For those of you who are who've been looking for the class 1W patterns, this looks like it is a valid class 1 pattern now with the slightly higher high today. So this is, one could progress this. As I say, it's probably better to wait until the end of the day, but just so that you can see what we will be doing. There it is, and there shouldn't be, we're not really interested in the bottom of the channel at all. It's really the resistance level that's in focus at the moment. So if that is what you're looking for, and you're not trading hybrids, you're only trading the impulse strategies, then you may well start looking for an entry here tomorrow. I do think there's better options though, better opportunities than that one. And also bear in mind, we do have that resistance level smack bang in our headlights. All right, so GBP yen over here, it's well outside of that channel, and last week's impulse candle not only closed above the previous candle's high, but also gave us a higher close on the wave, which is more bullish. So unless you're looking for a class 1W pattern on that time frame, certainly very tradable. For us, we discussed a trade last week and the week before that we were in on this, which is an H4 hybrid, when we had the cyclicity breakdown for this retracement wave on the daily time frame, but looking at the cyclicity on the H4 time frame. And as you can see, that hit the target nicely. So just dropping down to that time frame here, hit that, what that would have been on the 13th. So yeah, what was that? Thursday, where we hit our take profit on that one. For those of you who are trading this on the H4 impulse, then you should have had multiple trades. Perfect little setup over here, which went straight to target. Another one here, if you don't mind. Yeah, that was late on Thursday, so that's fine. You should have gotten to a trade there as well. Obviously, with the Friday pullback, and that's continuing today, it's not as strong as it once looked. 1, 2, 3, 4, 5, 6, and in fact, you would have been, if you're using advanced targeting, in fact, you wouldn't yet have trailed a stop beyond break even. So you'd be sitting at break even on this one, and maybe have been just taken out at break even in the last few hours, which is fine. It's a trade that had lots of possibility and cost you nothing to give it a go. All right, so GBP Yen, we had a very nice one there. Very happy with that. Swiss Yen, you can see this trader long on this currency pair. Weekly time frame again, very strongly bullish. Last week, another bullish impulse candle and giving us a higher close for the wave, even though it's more of a inverted hammer candle. That cyclicity looking like this on the daily time frame, so even a bit more aggressive. Nevertheless, you can see how this, what was resistance and now support, was in fact respected through the course of last week. So that closed, just closing outside of what was our XA leg, so that high, above that high. And then Friday, just a bit of an inside bar, but obviously in an impulse strategy, we assume that we're back into an impulse wave with that. You can see that this trader has therefore taken another trade, and I assume again that it would have been with their trade manager, because it was at 4 a.m. This morning at Central European time. So a bit early for most folks, but nevertheless, the trade manager allows you to take advantage of all of these trading opportunities. And this one has been messing around this morning a bit, but it looks like it may well be getting going now, but only time will tell. So a perfectly good trade, nice little one there with a, what is this, a class 1, class 2, class, looks like it was actually also a class 3 setup. So if you are waiting for a class 1 or a class 2, that's fine, but you would still be waiting a little bit longer with that slightly more conservative approach. Right, CAD Yen, similar picture, obviously, whether we got an impulse wave or candle or not, it's all very similar. The differences are slight. And you can see here as well, that resistance level still being tested this morning, waiting to see if that gets broken. And obviously, if you're trading, any of these of our strategies, then you may have taken trades on slightly different pairs compared to what this trader has done. This is also perfectly good for those folks who are recognizing it as a valid setup. Excuse me. But if obviously on this one, if you're a channel trader or a pattern trader, you can't use the daily time frame yet as a selection time frame, and that's probably why this trader favored the Swiss yen. All right, Aussie yen, 2 inside bars in a row here on the weekly time frame, so not quite as bullish as some of the others that we've seen. We spoke last week about a trade that we got into on this one, which was a daily impulse. We are still in this trade at break even now, using the 2 5-step rule. It really just went sideways for the whole of last week. So fortunately, we are earning swap on this one with our broker, because we're long Aussie and short yen. So that one's fine still. Similar picture with the Kiwi Yen, slight difference obviously with last week's candle not being an inside candle. The picture here, however, not quite as great. We got stopped out on this one for a very small loss last week. So happy with trying again. We can't make the market do exactly what we want, and you can see now that this has been going sideways for a while. We no longer have any valid patterns, although I certainly can advance the analysis on this time frame. Not that it's going to make any difference, because it's really just the bottom of the channel that will be affected. All right, so let's speed things up a little bit. Excuse me. Moving into our euro crosses, euro GBP. First of all, yes, we had a bearish impulse candle last week, but still on the weekly time frame, there's nothing else for us to look at here. It's just part of the chop. And that's still represented here on the daily time frame by the fact that we're inside of our HTC channel and we don't have a valid pattern. So it's still effectively a class 3 pattern. Having said that, this last wave was a bearish impulse wave. So that may well bode something for the future, but we need to wait and see. Not interested at the moment. And likewise, even more so, in fact, here on the Euro Swiss, I suppose in the weekly time frame, folks have been arguing that, yes, we are technically in a bearish trend and cyclicity is still intact. But the quality of this bearish impulse wave, should it even transpire into being an impulse wave, because it's not yet confirmed as one, has been very weak. So the likelihood of that is low. And here you can see we even had a false breakout last week, tried failed, and it just pulled straight back inside of the channel. So, not a pair that we typically trade anyway, and it's certainly not something we're interested in right now. More interesting, I suppose, the Eurocad here on weekly time frame. You can see we've had another bearish candle, not an impulse candle last week, but still, we confirmed bearish impulse wave on the weekly time frame of this potential trend. And you can see the cyclicity on the daily time frame is a little bit better. It's still weak. This is a class 2M pattern, obviously, with this wave encroaching on the XA leg. So if you're happy with class 2 patterns on your selection time frame, then I guess, or even as an execution, certainly on execution time frame, you should be. But having said that, our final criteria, which would be either an impulse candle that also closes in the correct half of the candle. We didn't get one last week for a daily impulse. They were tried, but didn't get there. So the fact that previous support level from the week before was tested and it failed quite dismally, as you can see on Thursday with the ECB announcement, shows us basically that there are definitely better instruments to trade. So we haven't touched this one. Euro Aussie also been sitting on our hands. We spoke about the previous week's hammer candle here. So respecting that support level, it did the same thing again last week. So that's 3 weeks in a row. Now this is an inside candle. Obviously it's early in the week at the moment, but I wouldn't be surprised if this low gets ringed this week. Another pair that we've stopped trading a few weeks ago already. And the last of our euro crosses, even more so. Here you can see we have had that previous low ringed by last week's candle. So that bearish breakout now proven as a false breakout. Market going sideways. Remember the 3 R's, certainly assuming the first of those being range at the moment. Right, into our GBP crosses, a similar one here as well, where it's respected a support level. So last week's bullish impulse candle effectively ringing the low from 2 weeks before that. Definitely nothing for us to look at here on this time frame, or indeed on the daily time frame. Nothing of interest at all. And remember, folks, this is the key to, from a technical point of view, obviously there's the mindset side that we teach, but from a technical point of view, the key to success in trading is only trading conditions that are appropriate for your strategy and avoiding those that aren't appropriate. So GBP Cad at the moment on the weekly time frame, we do have a potential trend here, not yet established, but we treat it as if it is. But last week's candle ringing that previous low, so we are now into a bullish retracement wave on this weekly time frame for GBP Cad. And here you can see the bullish cyclicity still intact on the daily time frame, representing that phase 2 wave. So it's very weak, the cyclicity. So overall, I would say that this market is still more bearish than bullish overall, even though in this time frame the cyclicity continues to be bullish. So if you're a hybrid trader, you're looking for a breakdown of this bullish cyclicity in order to short the market for in order to take advantage of a bearish move on the higher time frame. So that's the only thing that we would be considering for that period at the moment. And similarly on GBP Aussie as well, you can see how that low was ringed by last week's bullish candle. The bullish cyclicity here a little bit stronger, obviously. We've in fact got a phase 1 followed by a phase 1. We did have a final trade on this one. I think we spoke about it last week though already, and that was on the H4 time frame. So that would have been a bearish, might have been a bearish hybrid on H4. But at the moment, nothing doing. So last week we did get a higher close during the course of this intact wave. So not touching that at the moment. And Kiwi, even more so on GBP New Zealand dollar on the Kiwi cross. So here you can see how it closed well inside of our HDC channel. So bearish cyclicity is still intact, but certainly very weak, which means the best we can hope for here at an M pattern is a class 2. And here you can see that strong bullish cyclicity on this time frame. So testing at the moment, the top of our HDC channel. Let's see what happens, but yeah, we're not really interested. If you were looking to trade a class 1 W pattern, obviously that we do have now with Friday's bullish engulfing candle. So that means you could have actually started this morning looking to trade this in the bullish direction. But again, I think there's some of the other pairs that we've already looked at have offered better opportunities. CAD Swiss, so moving into our other crosses on a weekly time frame, you can see that this is still just a mess and not really interested in this at all, despite the fact that it is actually a class 1W pattern. It continues to test this resistance level without being able to break through it. And here it is on the daily time frame, really just going sideways at the moment. So another one to leave. Right, Aussie Swiss, bearish retracement here, as respecting the support level, which is the top of our HDC channel. I don't know why this hasn't been moved along, not that it changes anything. But in any case, it did support through the course of did respect the support level, beg your pardon, through the course of last week, but still looks like it wants to test it again through the course of this week. And again, we've just got this really flat sideways movement. We saw the breakdown in the bullish cyclicity the previous week, and that's just been confirmed, especially now with this high being ringed. So there's that bullish cyclicity definitely over. Aussie Cad, similarly, here on a weekly time frame, though, we've got the breakdown in sequentiality of any bullish cyclicity with that high being ringed by last week's bearish impulse candle. So another one where weekly time frame you wouldn't want to touch. And you can see that bullish move, that spike really was just a false breakout here on the daily time frame, as we discussed last week, and it just has continued through the course of last week, just to come back deeper into the HDC channel. So not touching that either. Aussie Kiwi, however, a little bit more interesting with this bullish impulse wave outside of the HDC channel. It's not a valid pattern, obviously. It is a class 3W pattern with an extended impulse wave outside of the channel. But if you're a channel trader, you would have been looking to trade this. And in fact, we did. This was one of our losing trades for last week. I think we might have discussed the setup a week ago. Well, we got stopped out, as you can see, which was a bit disappointing because the market then decided to take off on Wednesday. After that, it did pull back again, but it has remained, the closes have remained outside of the channel. And even though we've had the gap over the weekend, as you can see, quite a significant gap, in fact, at the moment, it's pushing back outside of that HTC channel. So quite interesting. But apart from that, to be honest, we haven't really had much. Certainly not last week. 1, 2, 3, 4, 5. Yeah, we didn't get any other trades on this one. So that leaves us with our last two Kiwi crosses. Kiwi Swiss on weekly again, a potential for a class 1W pattern on weekly, but that just remains potential with last week's bearish and a bearish impulse candle to be. So looking at our daily time frame on this, you can see that really last week this was just sideways. There's nothing of any interest there for us at all. Kiwi Cad, however, slightly different. You can see this trader even took a trade, must have been this morning, which doesn't look like this one's doing very well. But let's have a look at the analysis. On this time frame, there's nothing. Weekly time frame, you can see we're inside of the channel. There's no valid pattern. But dropping down to daily, you can see we did have that breakout of the HDC channel last week. So it's not a class 1M pattern, it's a class 2. But definitely an impulse wave, that class 2 pattern, and that obviously would be why this trader looked to trade this particular instrument, and I absolutely can't disagree with that. But unlucky, I guess, this morning with taking this bearish impulse candle as the setup candle, rather than getting the Friday candle, because obviously that candle was the last candle of the week, and not taking a trade in the early hours of this morning, which is understandable, but it does also mean that they got a less than optimal entry. So it's not over until it's over. Let's see what happens with it. But nevertheless, it's this one's not working out quite as well as some of the other trades that this trader has taken. All right, so that's the end of our currency pairs. Looking at gold briefly, we're still on the weekly time frame in a bullish trend, with last week giving us a nice bullish impulse candle. One of you folks on the group did ask about the setup for the hybrid, and you were quite right in that. Looking at the daily time frame, we actually had multiple setups to go along with class 3 patterns here, the last of those class 3 patterns, which would have been an entry there, what was that, last week, Tuesday morning, was absolutely spot on. So well done for those of you who did take that one. And of course, if you are looking to trade the daily impulse, then Friday's pullback outside of the HTC channel on this time frame, if today were to close where it is now, it's a perfect setup to go long on a daily impulse on gold. So overall, this is it's starting to look a lot better than it has for the last few weeks. But obviously, also if you are trading the lower time frames, then you may have looked for a hybrid at the end of this bearish phase one. You haven't bearish phase two, I beg your pardon, on the high time frame. Didn't get that because there was no cyclicity to actually break down. We had the bullish cyclicity breakdown, but the bearish cyclicity, we've had phase one and phase one. So now we're waiting for a pullback, and then you can look to go long. We might well get that. Well, we might be getting a pullback now. So let's see. Remember, valid pullback needs to be more than just a single inside bar. Right, so gold giving us a little bit of action there. Looking at our indices, not much happening. This is the Dow. There's no real change to the outlook from last week. You can see on the daily time frame, that's just going sideways. The others, there's a little bit more directional bias, both bearish. Here's the S&P with last week's bearish impulse candle on weekly. It's precluded a bullish class 1 W pattern because it closed back inside. But here on the daily time frame, yes, we are inside of the channel, but this is obviously a class 1M pattern here. So for those folks looking to trade those, you may well have shorted this market already this morning. If you were waiting for a limit order, unfortunately, it doesn't look like you would have got that. But nevertheless, it is definitely looking pretty bearish on this time frame with a valid class 1M pattern. And I think the same goes for the NASDAQ, which it's even more so, in fact. Looking at the daily time frame, yeah, absolutely another bearish impulse candle here. So you may well have shorted, well, either one of them. It's not a great idea to do both unless you're splitting your risk. All right, so those are the indices we look at. Oil last week, obviously the price going up again with this bullish engulfing impulse candle on the weekly time frame. But yeah, we don't have any valid cyclicity on the weekly time frame. So technically, we've got a range now on a weekly, and even in fact on daily. So yes, through the course of last week, it went up quite substantially, but we were very much inside of our HTC channel. And this is technically a class 4 W pattern. So excuse me again. Even though it's bullish, we need to see some bullish cyclicity starting to establish itself, which we don't have as yet, before we can look to trade that. Right, Bitcoin, yeah, bearish again. For those of us who buy and hold, you know, we've stopped worrying about the short-term fluctuations in Bitcoin, but floating around the $40,000 level at the moment, and in a range, a tighter range than what our HTC channel shows, obviously, but shouldn't be too long before the top of the channel comes down to reflect this resistance level. That's on weekly time frame. Daily still inside as well. It is a class 1M pattern. Bear that in mind. We did have 2 inside bars last week, but if you were waiting for the end of that retracement wave, well, certainly this morning you've got it, and you may well be shorting this. Looking at the lower time frames, yeah, if you were trading the hybrid, perfect setup here, absolutely perfect setup. And you would have taken a trade, what's that, at about 4 a.m. this morning. So you would need a trade manager for that, but unless you were awake and watching. But so far, very nice trade, and we may well get a nice bearish impulse setup as well through the course of today. So do keep an eye on that. Right, and then last but not least, we've got our US Treasuries, where we finally got stopped out on our trailing stop for the hybrid trade on the daily time frame, or execution was on daily, all the way back on the 8th of March. So this trade having lasted now well over a month, and finally given us, well, it's a very nice win. So we're very happy with, I think it's about 5 or 6 to 1 reward to risk on that one. on this time frame. So the cyclicity, the bearish cyclicity on this having now broken down means that we are technically in a range and looking to see for a resumption or renewal in a directional bias. Here on the H4 time frame as well, you can see we did have that bearish hybrid, which ultimately got stopped out at break even. So a bit of a pity, but some of our other hybrid trades hit take profit last week for very, very nice wins. So we were able to bank some really, really good profits last week, even though the trades were initiated in the week before. All right, folks. Well, that's pretty much it for the week. As always, if you are not yet a subscriber to the channel, please do subscribe and hit that notifications bell so that you are advised immediately we bring out our professional training or a new installment of that. If you like today's video, please hit that like button. And if you do have any questions, if there's anything from today that isn't clear and you'd like me to elaborate on, then please do put it into the comments below. I will respond to it personally. Besides, I like this to be a two-way conversation. It's one of the disadvantages now of doing everything online compared to teaching in person like I used to. But nevertheless, at least we can chat using the comments. So please feel free to do that below. All right, folks. Well, let's see what happens this week. Remember, we do have the French elections coming up on the, I think it's the 24th. So do bear that in mind. There is likely to be increased volatility across anything associated with the euro. Excuse me again. So do watch out for that. And we also, as I mentioned last week, we are going to be announcing some pretty important news for folks who are members of the Academy who are just interested in our training. So do keep an eye out for that announcement. As soon as I'm ready to do it, we'll be going ahead and letting you know all about that exciting news. All right, folks, have a fantastic week trading. I'll chat to you all soon. Bye for now.